Welcome back to Excel in Life. Today, I've got something really exciting to share with you. Last week, we talked about the ETF SuperStore, and I promised you an upgrade. Well, the wait is over. Introducing the ETF SuperStore version 2, your ultimate strategy for purchasing ETFs or stocks. No loss, only profit. This is very unique strategy and it is totally different from my previous episode. No chart, no research, no expertise needed. In today's video, we're going to explore the Google Sheet named ETF SuperStore version 2, step by step. With this sheet, I've been consistently earning a solid 4 to 5% on my investments, and I'm confident you can too do the same. Here is the ETF SuperStore version 2. This sheet is divided in some sections. This is information section, where you will get various information about your SuperStore. This is buy today section, where system will advise what to buy today. This section is sell today, where system will advise what to sell when some target is achieved. We've organized our investment strategy into 6 categories: equity ETF, Nifty 50, Nifty Next 50, Nifty Midcap 150, Nifty Small Cap 100, and Bullion ETF. Each of these categories has its own dedicated sheet where we track specific stocks and key metrics. Here's how it works. We collect top 10 stocks from this sheet, following some conditions which we will discuss now. Equity ETF sheet contains ETF code, underlying asset name, current market price, percentage change. Earlier we used to use 20 DMA, but in this updated version we will use 20 EMA. What is the difference between 20 DMA and 20 EMA? 20 DMA, or simple moving average, is the arithmetic average of closing prices over 20 days. EMA, or exponential moving average, is the weighted average that gives more importance to recent prices. Less sensitive, smooth. More sensitive, reacts faster to price changes. Suitable for stable, less volatile markets. EMA is suitable for volatile, rapidly changing markets. Suitable for long-term investors. Suitable for short-term traders. Hence, 20 EMA is most effective for our strategy. I have developed a unique and powerful formula to calculate 20 EMA in Google Sheet. You will not see this formula anywhere, which provides accurate results in a single line. What's more, you can easily adapt it to calculate other EMAs, like the 10 EMA or 5 EMA, by simply changing the period. Next, we record volatility of each ETF or stock. Volatility refers to the degree of variation in the price or risk of ETF or stock over time. Higher volatility means the price can change dramatically over a short period, whereas lower volatility indicates more stable prices. In our ETF SuperStore, the volatility of the various categories are as follows. Bullion ETF. These ETFs have the lowest volatility. They are backed by precious metals like gold and silver, making them relatively stable. Equity ETF. These are more volatile than bullion. They represent a broad spectrum of stocks which balances out extreme price movements. Nifty 50. These includes the top 50 companies listed on the NSE and have lower volatility compared to mid and small cap stocks due to their established nature. Nifty Next 50. These are slightly more volatile than Nifty 50, as they include companies that are on the verge of becoming large cap, but are still more stable than mid and small cap stocks. Nifty Midcap 150. These include mid-sized companies and exhibit higher volatility. These companies are still growing and hence experience more price fluctuations. Nifty Small Cap 100. These have the highest volatility. Small cap stocks are more susceptible to market changes and can experience significant price swings. By diversifying across these categories, we balance risk and potential returns. We have considered this volatility during dynamic averaging. Last, we record RSI, or Relative Strength Index. RSI is a momentum oscillator that measures the speed and change of price movements. It ranges from 0 to 100. It helps identify bullish or bearish conditions in a stock or ETF. We use RSI to identify bullish condition of a stock so that after purchasing we get early return. All our sheet is having similar formulas. Top 10 data is coming from individual sheet to this top sheet. This formula ensures we get lowest 20 EMA delta, which are currently rising, and also RSI of stock is more than target. For advanced user who knows RSI, can change this RSI value to select the desired stock. This dual criterion ensures that we are not only buying stocks at a dip but also selecting those that are showing signs of recovery. This strategy helps in ensuring an early return on our investment. Next, we select one stock from each category where the 20 EMA delta is lowest and ensure that the same stock is not already present in our store. As an example, in Midcap 150, stock NMDC is recommended. You can see that NMDC is recommended because other two stocks are already available in our store. Now, let's talk about how to decide the number of shares to purchase. We've set a maximum monthly investment target of 300,000 Indian rupees. By dividing this amount by 20 trading days, our daily investment target comes to 15,000 Indian rupees. To determine the actual investment amount, we add the profit book till date and then deduct the demat charges and taxes. This gives us the revised investment amount after adding the initial investment and profit after tax. Next, we divide this revised investment amount by 20 to get our daily investment target. Since we aim to purchase 3 stocks per day, we further divide this daily target by 3 to determine the amount to invest per stock. To derive the quantity of shares to purchase, we simply divide this per stock investment amount by the current market price, or CMPN, of the stock. This method ensures that your per stock investment amount will keep increasing as you book profits, allowing for greater investment potential over time. In our ETF SuperStore, we use a dynamic averaging technique to optimize our investment strategy. Our formula sets the averaging buy threshold based on stock volatility. For volatility less than 5%, the average buy price is 2.5% lower than the original purchase price. For volatility between 550, it's 5% lower. For volatility above 50%, it's 7% lower. The first averaging buy price is the percentage lower than the original purchase price. If the price falls further, the next averaging price will be double that percentage lower than the average purchase price, and so on. In the action column, the system compares the current market price CMPN with the targeted buying price. If the price falls below the target, the system waits for a potential further decline. When the stock price starts to increase, it triggers a buy signal, allowing you to average at the dip effectively. The action column will display a buy signal indicating the recommended quantity to purchase. The system recommends buying 20% more than the per stock investment amount to take full advantage of lower prices. This approach helps us improve our average purchase price and set up for higher potential gains when the stock price rebounds. Till now, we've discussed how to select stocks. Our ETF SuperStore highlights the cheapest shares to purchase. But when is the best time to buy? The ideal buying time is after 3 p.m. Throughout the day, the market remains volatile, and by 3 p.m., it usually stabilizes, giving us a more accurate price. It's recommended to open this Google Sheet after 3 p.m. and then check the Buy Today section. Purchase a maximum of 3 highlighted stocks and also look at the dynamic averaging section. If there's any stock displayed there, make sure to purchase the recommended quantity. After making your purchases, enter the data in the purchase history section. It's important to enter this data correctly. In the actual price column, include the brokerage and securities transaction tax (STD) as well. This ensures accurate tracking of your investments. Once you enter the purchase history, the new stock will automatically update it in the stock summary section. Here, you can see the average purchase price of a stock, its target selling price, and the target buying price for dynamic averaging. Now, let's discuss our selling strategy. You can set the selling target price in the sell column of the stock summary table. It is recommended to keep a target of 4 to 5%. The system will then decide the price for each individual stock based on this percentage. In the action column, the system compares the current market price with the targeted selling price. If the price rises above the target, the system will wait, anticipating a potential further rise. When the stock price starts to decrease, it will trigger a sell signal, allowing you to book profit effectively at the peak. As an example, you can see that Jyothi Lab stock is now more than 12%, but our system not yet triggered for sale, since this stock is still rising. The moment this stock price will start decreasing, system will ask us to sell and book profit. I am using this sheet for last 2 months, and I have earned 4,742 rupees. There are 41 stock in my SuperStore, and out of that 22 is rising. There are stock, which is giving me 7% profit and still rising. Next week, I will show you my live profit booking. If you want this Google Sheet, then check the description for link.
So, stay tuned, and let's keep growing together in this wild world of investing. Until next time, happy trading!